Hey everyone, I just want to start this weekly news recap wrapping up what happened this week. First off, when it comes to the Mexico tariffs, on Sunday, June the 2nd, Mexico came out and said they could tighten migration controls as they would not want to engage in a trade war with the US, but if the US did go through with the tariffs, they had a plan of action as well. On top of that, on Wednesday, the Senate Republicans warned that they may block the planned tariffs on Mexico as well. Throughout the week, we had some good progress made on the Mexico tariffs, and on Friday, President Trump announced on Twitter that they have reached an agreement and the Mexico tariffs are off the table, and Mexico would take a strong measure to further prevent the flow of migrants from coming to the US southern border. On Saturday, June the 1st, we had the Chinese come out stating that they were investigating FedEx for damaging the lawful rights and interests of its clients and violating the laws and regulations governing the express industry in China. But this is seen more like retaliation to the US trade war and the Huawei ban. Also on Friday, the US came out and stated that they will be giving some Chinese products more time before being subjected to higher tariffs. On Monday, Fed Bullard came out and stated that a rate cut could be warranted soon. Then on Tuesday, Fed Evans is also leading dovish as well. Then later on, Fed Chairman Powell stated that the Fed is ready to act to sustain economic expansion as the impact of the trade war intensifies. Also following the weak job growth in the month of May, the market took it as good news as it increases the chances of a rate cut. Currently, the market is pricing in a rate cut by July and a second cut in September, and a possibly third cut in October. On Tuesday, Australia's central bank came out and cut its cash rate to a record low of 1.25% as the economy slows down and the US trade wars lowers the global outlook. The financial markets are also predicting a second rate cut by September and a 50-50 possibility of a third cut before the end of the year. Starting off the week, we have crude oil going lower as the EIA reports US crude inventories rising by 6.8 million barrels versus an expected loss of 0.9 million barrels. After the report, oil plunges to a 5-month low. But later on during the week, we have the Saudis coming out saying that OPEC and its allies, including Russia, will extend the oil output cuts, and this helps rally crude oil back up to around $54 a barrel. The US Department of Justice and the Federal Trade Commission held a meeting to determine who would oversee the investigation into the tech industry. This week, we had the Department of Justice coming out stating that they will be opening an investigation into Google and Apple, and the Federal Trade Commission will be investigating Amazon and Facebook. With Google, they will be investigating the anti-competitive nature of Google, their skewed search results as they self-promote their products over competitors, as Google has been fined by the EU many times for violating its antitrust laws. The Federal Aviation Administration, or the FAA, reported on Sunday that more than 300 Boeing 737 planes may have faulty wing parts that don't meet the strength and durability standards and are susceptible to premature failures or cracks. These are designed to help create lift for the aircraft, but even if there is a complete failure, it wouldn't result in the loss of the aircraft. The FAA has given them a timeline of 10 days to have this issue resolved. On Monday, we had the largest private real estate transaction ever, where Blackstone Group is buying a US industry warehouse from the Singapore-based logistics provider GLP for $18.7 billion. Blackstone is betting big on logistics as the surge in e-commerce increases the demand for delivery and warehouse services. Some of the higher profile clients include Amazon and Walmart. On Monday, during Apple's Worldwide Developer Conference, some of the more noticeable announcements were the new dark mode for iOS 13, the new MacBook Pro, the new 32-inch monitor called the Pro Display XDR starting at $5,000, which doesn't have a stand. The stand itself alone costs $1,000. I thought the way they marketed it was bad. They should have priced it at $6,000 with the stand, and if you don't want the stand, you can get $1,000 off. They are also getting rid of iTunes and splitting up into 3 apps: Apple Music, Apple Podcasts, and Apple TV, and you'll be able to run your iOS apps on your Mac OS with the new update. This will allow Apple to reach an even bigger audience. The iPad now also runs its own OS called the iPad OS, which is based off the iOS. On Wednesday, we have a new EV partnership announced between BMW and Jaguar, as they will be joining together to develop electric motors, transmissions, and power electronics to help lower costs. On Thursday, we also have another EV partnership announced between Toyota and Subaru to develop a new electric SUV. They will be applying Subaru's all-wheel drive technology with Toyota's vehicle electrification technology to the new SUV and will be selling it under its own brand. On Thursday, we also had Fiat Chrysler stating that it withdrew its merger proposal for Renault, as both companies stated it was because of the French government. The French government wanted a guarantee that France would not lose any jobs, as General Electric has just recently cut over 1,000 jobs at the Belfort plant in eastern France. The French government owns a 15% stake in Renault. Google has finally released more information on Stadia this week. Stadia is like the Netflix for gaming, where you stream your games, so no need to own physical copies or update your games. No need to own consoles or gaming PCs. It will work on desktops, laptops, TVs, tablets, and even on your Pixel phone. Stadia Pro will cost $9.99 per month and will include free games and discount, and 4K gaming at 60 frames and 5.1 surround sound. Stadia Base will be free and allow users to purchase games and play games at 1080p at 60 frames with stereo sound. On Thursday, AT&T announced that they have changed their strategy, and instead of offering 3 different tiers for their streaming service, they're going to be offering one, priced between $16 to $17 per month. Their current HBO streaming service is offered at $15 per month already, and this new streaming service will include HBO, Cinemax, and Warner Bros. Library. They have also considered the idea of offering a cheaper ad-supported version as well later in 2020. On Friday, Walmart announced that starting this fall, they will be delivering right into your homes and inside your refrigerator or your garage. This announcement comes at the time when Amazon and Walmart has been fighting for shoppers over the delivery of goods. Walmart hasn't announced the pricing for this service yet, but they claim they will be able to do this at a really attractive cost by batching the deliveries together to help reduce the cost significantly. Overall, this was a good week for the markets. On the Mexico tariffs front, we made progress throughout the week and we even came to an agreement on Friday, and now we can put the Mexico tariffs behind us. The US government also came out and said they will be delaying tariffs on some Chinese goods for a week, but what really helped the markets up this week was the dovish outlook from the Feds, with the possibility of a rate cut coming soon. And with the weak job growth in the month of May, the market took that as more good news as it increases the possibility of more rate cuts. When it comes to earnings this week, some big movers were Campbell Soup. They beat their non-GAAP EPS but missed on their GAAP EPS and revenue, but they reported a margin beat. They reported a gross margin of 33.4% versus the consensus of 30.4%, and on top of that, they raised their guidance as well. Campbell Soup closed the week up over 18%. Ciena reported great earnings this week with a beat on EPS and revenue. They showed amazing growth in their networking platform with a growth of 81%. The stock closed the week up almost 30%. Zoom Video reported good earnings as well with a beat on EPS and revenue, and they raised their full year guidance as well. They closed the week up almost 18%. Beyond Meat also reported earnings this week with a slight beat on their non-GAAP EPS and a beat on their revenue, but a miss on their GAAP EPS. But what really drove the stock up was the potential in fast food chains, as A&W and Burger King both reported strong overall same-store sales growth in the stores that tested the plant-based meat products, and we could see other fast food chains such as McDonald's, Shake Shack, and Wendy's adopt these new plant-based meat products as well. Beyond Meat closed the week up over 33%. And as always, if you like this series, please like and subscribe, and thank you for watching. I'll see you in the next video.